you remember that we're offering on average 12% return. So if you imagine if you invest 100,000, 12% return, this is $1,000 a month. At the same time, if I look a little bit further into the future, we would like to be 1 billion plus asset under management manager. Yeah.
What is your take on the traditional investments? Hello, listeners. This is the Asian Century, and today we'll talk about private credit investing. So, in a world of market volatility, private credit investing combines income with actually solving real world problems and making an impact. Today, we have the CEO and also founder of Kilde here with us. So, Kilde has funded over $153 million, managed over $125 million in assets, and today we'll talk about this very importantly, has an average return of 12.47% in the last 12 months. So we have the CEO and co-founder Radek here with us. Radek, welcome.
Thank you for having me.
Yeah, so Radek, I'll to start with this question. Of course, we have started with the meaning of the word Kilde, right? So I understand what is the meaning of this word.
Thank you for this question. I get it a lot.
Yeah.
I did not want to name the company some kind of like a usual name because there are so many companies which are similar.
Yep.
In the world of investing, everybody is an intelligent investor, smart investments, and so on and so on. And also the Latin words have been taken. So we went to the north to my personal origins. I studied at the Stockholm School of Economics. As an exchange semester and was inspired by the environment. So I took a Norwegian word. Kilde means source, origin, or spring.
Okay.
And there are not so many companies called Kilde around. So it was a natural choice.
What does spring mean to you? Is it a new beginning?
It's kind of going back to the source, going back to the basics of the things. And it's pretty much what this private credit is about as well.
And you've had your career in different parts of the world, and you also had a part of your career here in Singapore as well. So tell us your story of how you started Kilde.
So we started Kilde in 2019. I was already in Singapore since 2017 at the time, and we found that the financial ecosystem in here and general the regulation environment is very conducive to doing the investment business. I was doing consulting for banks, card payment companies on quantitative risk management. So we had a lot of data about consumer loans, SME loans, and so on. I was thinking, this is a very good investable asset class.
Yep.
Very common in the US, in Europe. There are big investment funds just around this idea.
Yep.
Invest into consumer loans, but not so much here in Asia. While there's a gap what the banks are providing to the local consumers and SMEs and what they should be providing based on the needs. So we kind of like these two things match together. And that's how the idea to set up a regulated systemic investment business around this asset class came to be.
Yeah. In your other interviews, you also mentioned making an impact with Kilde. Can you tell us more about that as well?
Sure, we want to make an impact both on the investors and the borrowers, but I need to make a distinction that we are not an impact fund per se.
Yep.
Because there are quite a few of them and they are doing a really good job. We are commercially focused private credit investment firm.
Yep.
But by doing a well-meant business with the good intentions, you are actually also making impact, and I guess during the interview we'll get to that as well.
Yep. So like you said, private credit investing is fairly new here in Asia. So for the audience who might not be familiar with this, can you tell us what does it mean?
That's probably the most difficult question. Private credit is really a basket term. So it's better to define it like negatively. What is not private credit? So private credit is not investing into the public bonds, public commercial papers. It's also usually not considered the loans which bank provide. to their borrowers. This is not a private credit. It's either banking,
Yeah.
right, or public fixed income markets.
Mhm.
So everything else could loosely fall into the category of the private credit. Private credit was born in the USA on the back of the mergers and acquisition transactions. A lot of these transactions are levered, so it means that they need a debt component to it. And these big private equity firms started providing this debt as well, alongside like a longer term equity. And that's how private credit was born maybe some 20 years ago. These kind of transactions are called sponsored because there's a sponsor of the transaction, of the M&A transaction, usually some investment bank or some private equity player.
Yep.
And then the private credit goes along. And that's how most of the known life for the private credit was these kind of transactions. But lately it branched out into a so-called non-sponsored transactions where basically the private credit investor like goes and give a loan to public or non-public company as a leverage, right? And as a substitution of the public credit or a bank credit or alongside that. And that non-sponsored transaction became very active in the past, maybe like 7-8 years. Again, the most of the volume is in the US, and the second largest volume is in Europe, and then no one, and then we start here in Asia.
Yeah. So thank you for that, top overview of that. Let's say I'm an investor and I meet you today, and how would you explain private credit investing?
Well, if you're an investor, I would explain if you are looking into regular fixed income and you would like to diversify away from the volatile public markets, and the bonds had a really wild ride.
Yes.
Since COVID, right? It was never a peaceful year, I would say. Then private credit is something which you could introduce into your portfolio. Usually it's recommended maybe 10-15% of the portfolio at the expense of the public fixed income, could be in the balance portfolio.
Let's say if they ask you this layman question, how does it work? Can you explain briefly?
It works as an old school banking, right? Because the private credit investor or lender, the investment company, comes, finds suitable borrowers, do the credit analysis on the borrowers, and then extend a loan facility. It can vary, right? It could be unsecured, secured, different level of seniority, and then collects coupons and then pays back to their investors, to their limited partners.
So for the people here in Asia, we also understand that these type of investments are not for everyone. I understand it's for accredited investors. What is that exactly?
Well, it depends. Some portion of private credit are even in Singapore eligible for retail investors.
Yeah.
It's a more exception rather than the rule. I think the Singapore investors will mostly meet private credit through distribution partners of the large US funds, like those Hamilton Lanes, Apollos, KKR, those large investment firms. And they lately started expanding the distribution to individual investors, like as well, right? And they have some distribution partners here in Singapore as well. So you can look it up. It's easiest. Some of them are almost ETF-like. So it's possible to subscribe, possible to redeem. So it's a good start, like into the private credit. The downside is that the return gonna be a bit more limited because there's a many players in between you as an investor and then the eventual investment, right? And it's also exposure mostly to the US markets, where some investors now prefer to diversify away from the US dollar and the US market. Yeah, so that's the most obvious part. Then there are some specialty providers like us. So we are investment firms which both manufactures these credit opportunities. So we find the borrowers, we underwrite them, we select them, we make the investment, we structure the investment, and then we distribute to investors. And because we do everything in-house, that's why most of the margin stays also in-house, and we can share the most of the margin back with the investors. And that's why you mentioned the return, on average 12% annually.
Yep.
This is because It's not that we will be charging more than the US private credit funds, those KKR Apollos. We are charging roughly the same, but we can give back more to investors because we do most of the things in-house.
Yep.
And we have a technology platform how we distribute these deals directly to investors.
Yeah. So for accredited investors, they need to apply and be recognized. Am I right? That's an accredited investor.
Yes. So every investment firm you're investing with, they need to recognize you as an accredited investor.
Yeah.
And as an accredited investor, you need to have an income more than 300,000 Singapore dollar annually, or 1 million Singapore dollar in liquid assets, or 2 million in a total assets. And then there are some caveats to it as well. And you need to prove to the investment firm that you are an accredited investor. Once you do it, usually the universe of investments which are available to you, like significantly, is larger. But there's a downside to it as well. Your protection are also lesser. So retail investors are way more protected. So that's why even if you are a accredited investor, you do not need to agree to be treated as such. You can say, I want to be treated as a retail investor. But it's a trade-off, right? You will have a lesser universe of investment opportunities, but you have more protections.
Oh, that's interesting. So for just now, we spoke about the investors, right? And we always compare with the markets and all these traditional investments. What is your take on the traditional investments?
Well, you should invest in traditional investments. That's why traditional. And most of your portfolio should be in the traditional investments. But what is happening, again, in the past, probably like 8 years, globally, is that companies stay private longer. Banks do less business with their traditional customers, like small, medium businesses, consumers, thin credit file consumers, as we call them. Therefore, the private markets are getting like larger generally, and that's why also the investors need to increase their investments into the private markets just to stay balanced. But it doesn't mean that you shouldn't invest in the stock market, that you shouldn't have a bonds in your portfolio. You should. They should, yeah. But private markets should be there in the portfolio as well. Perhaps like those which believe in crypto, I believe they should also have some portion like in there in the balanced portfolio, because you never know, right? Something will shoot up, right? So you want to be exposed to that.
Yeah, of course.
To that part of the market.
Yeah, there are downsides as well, which private credit investing is helping to fill the gap. Am I right?
Well, there are downsides to the public markets, is the volatility. So there was a very interesting research which came out recently, and everybody was reminded. If you look at S&P 500, like the most known index of the stocks, on average, long-term average, it's making about 8% a year. But if you invest in a year when the valuations are low, then you can get 10-11%. When you invest in the year when valuations are high, then you are going to be closer to this 8% and even less, maybe sometimes 6%. You will get. So you see the volatility, this difference, 11% to 6%. That's a lot, right?
Yeah,
it's almost like twice as much or twice less you can make. The same with the bonds, right? The bonds, like they feel they should be safer. They should be destabilizing. But like this year, they are behaving again. They are moving the same direction with the stocks, right? Again, so this usual diversification 60-40 is broken again, like this year. That's why these are all the downsides investing into the public market. So you have more upside, I would say, but there's the downside of the volatility. So if you're a patient investor, that's fine. If you do not need to retire early, or you don't need to draw regular income from the market, then you are fine. But if you are about to retire, if you are about to if you want to be a passive income investor, then you need to construct your portfolio differently.
You mentioned passive income. So this is one of the features of private credit investing. Can you tell us more about that?
This could be one of the features of the private credit investing. Passive income also is a mysterious beast, which a lot of people misunderstood. So definitely passive income is not something you need to actively like work for. So any kind of like a drop shipping, I don't know, like making business with the ChatGPTs, these are not passive income. Also more closer to the investment, trading during your daytime.
Yeah.
There's also not a passive income. This is kind of a job, right? You need to do like a trading, and so passive income is really I put money somewhere to some investment instrument or with some investment manager, and they'll be giving me regular distribution, regular payout. So this is true passive income in this sense.
Yeah.
So private credit could be passive income. I believe that Kilde actually is one of the few providers which is doing a payouts regularly. We have a payout days twice a month actually.
Oh.
Yeah. So depending on the investment instruments which you will choose, you will get payouts monthly or quarterly, and the payout days are twice a month. So it's this could be very attractive. You remember that we're offering on average 12% return. So if you imagine if you invest 100,000, 12% return, this is $1,000 a month. So you can imagine there are some things you can do. It is $1,000
Yeah.
a month,
lot of
right?
things,
You can you can still buy a lot of things in Singapore.
Yeah, so this payout is something very interesting, and you've been in the market for 6 years now. And of course, you've met a lot of these investors, and I believe you have some stories as well, or some of these investors that you know. Can you share with us, what's their story or what's their experience so far?
I think each story is different, and everybody uses Kilde in a different way, how they fit it. So one use case is obviously the passive income one. And for some reason, we are one of the few which is actually doing this kind of regular distributions. So the investors really like it. They like the monthly regularity. They just like this regularity, right?
Yeah.
This is the coupon day. Okay, I will get it immediately. So people love this. And they also love that they can redeem at the face value. So that's one obvious use case. Other use case, because the return is relatively high. If you think about 12% return, basically you will double your investment. Actually, in a like less than 10 years, you will double it. So people think, okay, this is probably safer than the stock market, which can crash, right? It can take 30%, 40% in a really bad situation, right? Hit.
Yeah.
That's probably not going to happen with a credit, and still it's relatively high return. So therefore they think about it. Okay, so it's a safer way how I can grow my investments in this way. So this is the second use case. The third use case was about the people who are closer to the retirement and they cannot afford volatility in the market and say, okay, I want to retire in a year, in 2 years, 3 years. I'm in the stock market, right? Stock market was doing really well.
Yep.
Still, I think it's going to be doing well for a while. But what if you need to retire and now I need to take the money out and I'm down 30%? It is a very unfortunate situation. That's why it's recommended for people who are about to retire to actually go diversify into the reinvest into the instruments which you can redeem at the face value or the close to the face value. Face value is the value of the investment. And again, Kilde offer redemptions at the face value. So that's why it's also attractive for this specific use case.
Yeah, and with the payouts, they can reinvest as well. Am I right?
Payouts they can reinvest if they want. Yeah.
Yeah. So when you mention how does this work, of course, there's another side of things, which are the borrowers, and understanding from your team as well. You have borrowers from different countries in different markets as well. Can you tell us a bit about the borrowers?
We serve specific group of borrowers, which are lending companies to consumers on MSME. And those are usually large companies. They might have assets ranging from 20 million is kind of the smallest one, but $500 million is actually the largest one. 500 million, right? It's $500 million. And the average is going to be about 100 million. So it's a large, so not SMEs themselves. These are relatively large companies. They are all profitable. They are growing fast, and they do buy now pay later, early wage access, supply chain financing. These things understand. And we focus only on these companies because those companies we understand. We don't venture out to the places we don't understand. This is a quite a big sin for investment managers if they do that. So we try to avoid that. And the borrowers, as you correctly mentioned, are geographical spread between Europe, Central Asia, East Asia, India, and Southeast Asia. And there's also a reason for that. Because that way we are diversifying away some economic cycles, which might be contained, right? There has been a Southeast Asian crisis, right, in the 90s. So it didn't affect that much other part of the market. So that's why we are also in Europe, quite far away from here. But also our borrowers, because they are so specialized, they have more in common than with other companies like in their region. Like European consumer lender has way more in common with Indonesian consumer lender than with European manufacturing company. Right? So that way we use the template we understand in a different markets. And we only invest in the markets we also understand as well. So we don't go to every country. We only go with the countries which have very mature regulation, or the borrowers needs to be licensed. They need to have a good regulatory footing there.
So there's amount of risk management as well. And of course, there are sometimes, borrowers might default. I think you have a system actually to handle this. Am I right?
In a credit like portfolio, it's relatively like a normal thing that the borrowers default. It's not that alarming as long as it's contained and within the planned level. We plan for like a zero default. For us, a default is like an emergency landing of a plane. Like it should not happen. 99.9% should not happen.
It's a parachute.
But we need to be prepared for it if that happens. And so first of all, what I always like recommending investors, although we didn't have any repayment problems in the past 6 years, and we intend to keep it that way. We always want to land on the runway, not next to the runway,
not emergency,
or not on the water. But they should use the seatbelt, right? Still, So they should diversify. They should not put all the money into one specific single deal. Diversify it, and we offer a lot of tools for that, and we do new deals on a weekly basis, so give opportunity to the investors for the Diversify, right? But if that unfortunate and rare event would happen, we are also ready for it. So we hope that we would spot it like in advance, and actually divest ourselves from that borrower before any repayment problem will happen. Thanks to our expertise in consumer lending and SME lending, we actually have a crystal ball we a little bit see in the future, because we not only look at the financial statement, which tells you what happened in the past. We look at the underlying loan portfolio of our borrowers, so the actual consumer loans, actual SME loans, and based on the performance or lack of performance of that portfolio, we can see what's going to happen with our customer in the future, and we can do several things. We can stop investing with this borrower, just wait. We can start decreasing our exposure. We can create we can accelerate the repayment, right? So there's a lot of things we can actively do, and because we have 24 active borrowers, so we can spend quite time with the borrowers, not hundreds of them, right? So we know each other in person. We visited them in the place of location, every single one. We have a quarterly checkups like with them. We check the covenants. So a lot of things would happen before actually something defaults. But if the default will happen, then we will be the one who will be handling the situation with the borrower and assuring that the investors get the capital back.
So for these active borrowers, is there any stories that you've made an impact to their business?
Sure. I think the stories are more with the a smaller one, because we work with the larger ones. Like I can name one of our clients, for instance, Atomy, which might be in Singapore, very well known. But there are smaller ones as well. Perhaps I will mention one small one is the name is Fluid. They do supply chain financing to the small merchants, the small shops, right? Or small merchants, and they often buy from companies like Coca-Cola here in Singapore and Malaysia.
Yep.
And thanks to Fluid, actually Coca-Cola can offer those merchant credit terms on their purchases, which is quite important, right, for the small shops. And it's a very seamless. And we've been, for Fluid, we've been the first institutional debt investor. Although they are very well funded. I think they've been funded by Insignia Ventures. They have a very reputable VCs and very experienced team. But we've been the first one who believe in them and actually give them the first stamp of approval as an institutional investment manager on the debt side, which led to more investments later from more institutional managers to them. And then they are doing tremendous jobs.
Thank you for sharing those stories. So in the beginning, I mentioned a couple of statistics. Now you have over 125 million under asset management, with all-time over funding over 153 million. So you've been around for 6 years now. How has the growth been, and how do you achieve this growth?
Well, by doing the diligent work every day, like the same, we do the same thing the whole 6 years. Never changed the strategy. We never pivoted the investment.
Yep.
Like we refined it, but never pivoted it in a way. And we started with institutional funding from North Asia. And then around the beginning of 2024, where we have we thought we have enough experience. This was about 4 years into the business. We're going to open this investment to the individual accredited investors as well. And we're starting to learn how to communicate with them, what is important to them actually. And by this learning and this communication, we started growing with them a lot. Now we grow about 10% every month just on this customer segment. That alone allows us to probably double the business every year. We've been doubling actually the business every year since the beginning. Yeah, became harder and harder because the business is
harder to double.
Yeah, but that's what we intend to keep. And so far it works. And then we also gonna go for after other customer segments. So we have a lot of family offices which are waiting literally at the door. Would like to deploy, but we don't have the right investment vehicles for them or in the right form how to offer them the investment. And we are very intensely working on bringing the right entry, I would say the right shape of the door, if I can say this way, for a different kind of investors.
And speaking about your achievements, 100% growth, that's very impressive. What are your goals? What is your short-term or long-term goals for this?
Keep the growth, keep growing, and keep the quality of the investment while growing, which I think is very realistic. Opening more distribution channels, start partnering with wealth management channels so we can reach more investors. Actually, wealth managers can offer our kind of investments to their investors, and I think it will be very beneficial. As I mentioned, 10-15% private credit in the portfolio, I think it's a good thing. Generally, but hard to get. At the same time, if I look a little bit further into the future, we would like to be 1 billion plus asset under management manager. Then you are like a grown up, right? Already. We are still adolescent at this size. But I would like to stick to the income investing, alternative income investing. But at this stage, in the 3-5 years from now, we're probably going to be offering products from other managers as well. And we will offer our investors to build diversify fixed income portfolio in a single platform with the same convenience, same speed, and same customer support they are getting from us now.
Yeah, that's very impressive. And, I think you can reach 1 billion under asset management. So that's a very good goal. So this year has been a very interesting year, a very uncertain year with very volatile markets. So back to the investors now. So for the investors who are investing in these uncertain times, what can you say to them about private credit investing?
I would tell them, hold out there, be patient, like don't panic, like invest into alternative as well, but choose the right managers. Choose the right managers. Get a good advice. Like volatility is there, like will be here, but it like looks like the asset prices will go up eventually, and we can see it at the market despite the volatility. So being invested is important. Like sitting on the pile of cash, unless you have a very clever strategy, you are like a Warren Buffett, right? And waiting like for, okay, I'm gonna buy the dip. For individual investors, very difficult to time the market.
Yeah.
So I would suggest not to even try. And like be invested, because you can lose a lot of opportunity if you are not invested, even in the volatile times.
Besides that goal, that 1 billion under asset management goal, as you yourself as the company personally, what else do you see in the future for your vision of the company?
I would like to continue doing at scale, like
Yeah.
what we are doing. So offering a digital first experience where everything can be done digitally. You
Yep.
don't need to speak to anyone if you don't want to.
Yeah.
But if you want to, it's very easy to, and we are very approachable.
Yeah.
To speak with your relationship manager, to reach out to us, to go one of our events, right?
Yeah.
To feel very close to the company, and also to influence what kind of products or how do we package the products we offer. So we consult a lot with our investor base about what should we offer. Is that good? What is the good experience? What does like hinder you from investing more? Or what are you afraid of even? What other things you are doing? Well, that's kind of feedback loop is very important. So it's something like the banking used to be about, right? If I look at banking at the beginning of 20th century, in the 19th century, like you went to the local bank, right?
Yeah.
And then that local bank, you know the banker, he knew you, right? You have this like trust there. The banker was extending the credit to the local businesses like in that town, right? We kind of completely lost that, right? And that's I think it's such a shame.
Yeah.
And we need to go back to the basics, right? Back to the roots, or like why actually the banking and financial markets actually exist, because we went so far away from that, right? And the customer experience, one of the things which I think like suffered like a lot. So in the beginning, the digital channels was about convenience. Like I can in my pajama do investment. Sure, that's great. But what is not great, that I have some unusual problem, I needed to resolve it, and I don't even find the number of the contact center on the web page because the people start hiding it, right? When I go on the chat, there's some chatbot, right, which is like saying, oh, like that's very frustrating, and it's again so far from this personal experience. So we try to revive this experience. So there's the live person. There's no chatbot. There's a live person you can talk to, right? And it is this number. You can call him or her, like when you want, right?
Yeah, that's very important. I think, like you said, in the early days of banking, that personal touch, which I think you're trying to bring back as well. Thank you, Radek. We've learned so much today on not just the returns that Kilde is making, but on the impact as well to the borrowers, and also how to maneuver in these uncertain markets. And certainly, private credit investing is new here in Asia, but we can consider it as a new investment platform as well. So thank you so much, Radek, for sharing with us. And please check out Kilde's website as well. Thank you.
Thank you for the questions.
Thank you.